Steven,
Matt,
it's great to be back with you, brother.
it's great to be back with you.
Me, you, Baby Yoda.
Listen, baby Yoda's legit.
It's a great start to a Thursday evening, if I don't say
It
so
is a
myself.
great start to a Thursday evening, Matt. How is everybody doing tonight? Hopefully, everybody's doing well. Before we get into it, please take a moment. Matt and I have no idea what we're doing, and we have no idea what we're going to talk about. But if you think something's interesting, please do your due diligence. Please take a moment, pause the video, read the disclaimer. We are not financial advisors. We just do a lot of research. Don't take anything we say too seriously. Make sure you do your own due diligence. And thank you very much. So, Matt.
Yeah.
Interesting day today.
For you? Why?
You know what was up today? You have any idea?
Venture Global?
Venture Global, I believe, was up. That's not what I was going to say, but we could start with Venture Global, sure.
We don't have to.
What we can start. We can absolutely start. Do we know why?
Well, first and foremost, can I, before I'm just going to completely cut you off and be extremely rude. I had no idea that Google passed Apple and Microsoft.
Because you don't look at it every day?
I mean, I do, but like I didn't know that it went to a $4 trillion market cap company.
I'm glad you said that. I got a bone to pick with Alphabet. You ready?
I thought you were about to say SJC.
No. You ready?
He's the one that I read. He's the tweet that I read that informed me of this.
The fact that I couldn't make a new thumbnail and it kept giving me that message that too many people were trying to make images. So just so everybody knows, I had to reuse a thumbnail because Matt was over there shooting me freaking thumbnail after thumbnail. And I go to make a new one and it gives me a message that they don't have any more bandwidth because too many people are making images. And I took a screenshot and sent it to Matt.
Did you at least see the one that I made before the most recent one?
I saw you mean the one that Island Time one?
No, there's so many, Steve. Hold on.
I know there's a lot. You sent so many. I don't even know which one.
To be like, you should immediately called them out and be like, I'm paying for this, right? Like, I don't know who you think you're talking to, but I will take my money elsewhere. I'm a paying customer. Don't you ever tell me.
Well, that's the thing. I'm a paying customer for Gemini and it wouldn't let me make a new thumbnail.
That's what I'm saying.
It's no bueno.
I didn't realize I got into so much other stuff after.
Everyone in the chat, I am reading everything. Thank you very much for being here. We truly appreciate it. Hopefully you're entertained by us knuckleheads.
Hold on for a sec. I almost have it. It started getting angry at me, so I stopped. Let's see.
What did you do, Matt?
Well, there's this one. Hold on, let me copy this one. I think this one might be the one that I use.
Share the screen, and I'll put it up.
No, that's a lot. There's a lot going on over here.
Oh, there's a lot going on. Matt doesn't want to share it. It's okay. Adam James, thank you so much. Really appreciate it.
I want people to see my proprietary.
Yeah, I saw that. No, you did not send me this. This one you did not send me. So I am going to share the screen, everybody.
I thought this is one that's on there right now.
I'm trying to write an article for Seeking Alpha, and you got Maddie over here sending me this. And then him sitting on a beach, smoking a cigar, reading the Wall Street Journal, having a daiquiri and eating a pineapple.
Shout out pineapple, dude. Pineapple's underrated.
So underrated.
Especially in some yogurt. Ooh, some cottage cheese. That's gonna make me sound like a 75-year-old man, but if you're looking for a healthy snack, cottage cheese and pineapple. So
I forget the cottage cheese is straight pineapple.
I mean,
it is delicious. Delicious.
What about the one I just sent you?
I didn't get another one from you.
Hold on. Did.
Did I? Oh, Jesus Christ. What's wrong with you? Were we moving from freaking quarter zips to freaking full vest?
Yeah.
Jesus. So Matt's over there having fun with Gemini, using all the bandwidth, and I can't even get a new thumbnail to use.
No wonder why the market cap's up to 4 trillion.
Yeah, it's all the compute you're taking up.
Yeah, they're like, damn, the compute's going through the roof. Gemini's taking over for OpenAI. It's just 90% me fucking around.
Oh my god. Hilarious.
What else can I make?
All right, let's put Gemini
I'm paying
down.
attention. I'm paying attention. What do you think
Let's
that
give the people what they want.
what do you think about that dark green? I've been looking for a suit that is that dark green. That dark green looks like $1 million, right? Show the people.
I'm not a green lover in clothing.
All right, everybody, have a good night. No, I'm just kidding.
I'm not a green lover for clothing. I am navy.
I get it. I get it.
You know, I'm not adventurous. What can I say? Not adventurous. So, Matt, let's start with Venture Global. We know a lot of people like this name. Up 10.26% today.
Yeah, man.
What's the story?
I honestly have no idea. I've been looking for a reason today. I mean, Henry Hub prices are down slightly. And for people that don't know, it's not necessarily strictly about US prices. It's a combination of US prices. What happened? We're in trouble.
I'm here, Matt.
Is my stream skipping? What is going on?
No, I'm here.
I feel like for some reason it seems like my stream is skipping. But I think it was just a lot of people just getting more risk on, because I don't think it was at all specifically about natural gas and LNG, because there were so many other companies that a little bit more risk on that also took a very big leap up, about 8 to 10% as well today. So I think it was just a lot of people getting after it overall. But if you think about it, the benefit of LNG specifically for the US is low prices in the US, hopefully, and selling it for as much as you can, whether that's in Europe or Japan or Korea. So to me, I think it's at a very low point right now. I think everybody and their mom thinks that LNG spread prices are going to zero. When in actuality, I think you're starting to see Europe with the lowest storage it's had in several years, and accelerating in terms of usage because of the cold snap. And I think you're going to end up seeing a lot more buying happening. And I don't think that people have fully priced in the fact that Russian LNG is going to have to cease. So spot LNG prices have already ceased, I believe, by middle of this year, or maybe it's Jan 27. All LNG is completely going to cease from Russia, and then at some point pipeline LNG from Russia is going to completely cease. And so the current rhetoric at the moment is that Europe is getting so energy independent, whether it's using solar, wind, nuclear, etc., that their energy usage is actually going to go down. And I am not a believer that energy usage in Europe will actually go down, especially if Europe wants to compete in this data infrastructure race that's currently going on in the United States. So I'm bullish that usage in Europe is actually going to take a drastic turn. I think a lot of people are being super optimistic. I think that you're going to continue to see a lot of issues with people saying that there's so much supply glut. Is there a lot of supply coming online? Yes, there is. But I think at the moment, there's a lot of people pushing off projects, which I think is going to be extremely bullish in 2030, 2035. As these guys have an incumbent position and everyone starts to rush to get their facilities online, these guys are the ones that are going to be able to take advantage. So that's currently where my stance is. In terms of the price action today, I couldn't tell you. It seems like it was a lot of people wanting to get a little bit more risk on and potentially taking an opportunity to look for more assets that are going to make money in the 5 to 10 year range than security. Like we have seen a lot of people moving to secure, I don't want to say distressed assets, but things that are a little bit less speculative and more tangible, like Coca-Cola's and the Philip Morris's of the world. I think today was a win for the companies that are a little bit more speculative in kind of the medium to long term. And I think another piece that people need to start recognizing is once these companies actually come online and get actual pipe through the gas, or the gas through the pipe rather, and onto these ships, they're actually going to be able to change their investment grade. At the moment, Venture Global is currently speculative grade in terms of bond ratings. It alone, just getting a refresh of some of the bonds that it has, it saves them $300 to $400 million in net income a year. Obviously, that's not going to change the EBITDA, but it'll change the net income for sure. And if you put a multiple on that, there's that piece. And then next decade doesn't even have any rating from Moody's and S&P. And so once that finally gets a rating, they will also potentially be able to refinance debt. And if that's the case, then that'll be hundreds of millions of dollars directly into next decade's pocket. And the company's only like less than $2 billion. So hundreds of millions of dollars is literally large percentages of its entire market cap before you even put a multiple on it. So long US LNG, it's going to be the largest exporting item that the United States has. And if you don't have a market share in it, well, I think you'll be sorely disappointed in 10 years.
American Energy for the win. So there was some speculation in the chat that I was getting yelled at when I turned the camera off. I was not getting yelled at. In fact, I was given something to ring when a Mick comes on.
Is a Mick coming on?
Well, no, just the next time he comes on. I think he's out or something right now. I now have a bell like a Mitt. It is smaller, but I have a bell just like a Mitt to ring. So that will be a surprise for him when he comes on.
There you go. That's a nice bell.
Maybe he makes an appearance Saturday. Maybe he makes an appearance Sunday. Maybe Monday. We'll see what happens.
Maybe.
We will see what happens.
Maybe
so,
Matt,
in addition to VJ, did you happen to see QXO?
No, Steve, I can't afford that one.
What do you mean?
I'm anticipating that. Let me take a gander here. Obviously, Trump is going to put $200 billion into mortgage-backed securities. It's going to help push down interest rates. And so I anticipate QXO, obviously, is a derivative of that, which obviously turns out bullish for our boy, Stefan.
You're not wrong, as you would like to say. You're not wrong.
Some say I'm not just a guy messing around on Gemini, that I actually can put two and two together.
You're not wrong, because when a big buyer with 200 billion comes in, prices go up and yields go down, baby. That's what happens. And when 200 billion of agency MBS gets bought up, direct increase in demand, pretty good for yields. And
do you think all the money leaving Blackstone is going directly into QXO, or what's the deal?
Well, I have no idea. QXO is up at another 5.43% today.
Steve, I'm happy. I hope this is a cornerstone in your portfolio, or is it just like a baby hole?
It is not, but I do have a good amount.
Good. I'm glad. That makes me happy.
I am happy. My average, I think it's like 1690 or 1710, something like that.
I remember, yeah. I mean, you're not pulling numbers out of your butt. I mean, I
bought the first tranche around 1840, and then I bought more when it dipped below 17.
I'd actually love to see, when did our boy Ken actually talk about QXO? Was that before the May run up?
So he said it a long time ago in the group chat. I'll tell you offline why he said it.
Well, I think he was bullish on the CEO, but we'll talk about it after.
Yeah, it was all because of the CEO.
Yeah. I like it.
I'm happy though.
Congratulations on the win. Are you selling calls on this?
No, I haven't even looked at calls on it. I can't believe they would even be.
Would you? Money's money, Steve. Money's money. It doesn't need to print 20% a month. He doesn't need to sell 20% a month. You don't need to be like Tevis. You can just get your singles, hidden singles, add it to the portfolio, reinvest.
Tevis may be my advisor for our little competition. Just saying.
Don't take that from that degenerate. Or do. I mean, it depends. I mean, we're betting dinner. It'll be a nice dinner.
We may be.
We're not going to Panera Bread. Like, we're going
Oh
somewhere
no,
good. No.
no.
We're getting wine too. Wine on me. Easy.
We're also not going to like John's on Bleecker. Like, if I lose, I'll take you to Benjamin's or something like that.
I mean,
Adam James, thank you
although
very
I do
much.
need to go to John's on, or John.
Well, no, we can do John's on Bleecker as an appetizer.
I like that. I like that.
And then we go to the main course. Like how can GS underwrite SoFi offer and then do that? I have no freaking clue. Sketchy. Tariq is investing. So you guys are saying XLE is a buy right now. I've been saying that I like American Energy for a while. I think it's been underrated and undervalued. And I think this is the year American Energy does really well.
Sorry, I didn't mean to cut you off there.
No.
I don't know what's in XLE. Is it strictly oil and gas, or is it?
Yeah, XLE is I think it's like 45% Exxon and Chevron.
Okay. Yeah,
it's all upstream producers, I think.
You asked me 5 years ago, 6 years ago, 7 years ago, I would have said stay the hell away. Because so many of these companies were so levered. They were small mom and pops, and the problem when you buy sector, and this isn't specifically XLE, I think this is this can be blanketed, although there's some caveats to it. When you buy sector ETFs, sometimes you're buying some shit companies along with the diamonds. So you kind of have to be cautious as to, and that Steve just noted, like XLE might be mostly led by Chevron, Exxon, but 5-10% of it might be some dog shit companies that you don't want to put money into. That being stated, 5-6 years ago, there were so many debt-ridden oil and gas companies that I wouldn't have put $1 into. And so when the pandemic happened in 2020 and oil prices literally went negative, a lot of those companies went to zero. So a lot of people ended up never really recovering in XLE until rather recently, when a lot of those companies have been removed. So I think XLE is a better opportunity now than it ever has been. But I personally would try to find oil companies that I like. And but that's me, right? And that's up to you. And please recognize as well that upstream is different than refining, which is different than midstream. Mm-hmm. It's like talking about AI, right? How are you investing? Are you investing in the robotics of AI? Are you investing in the NVIDIAs of the world, which is the chip makers? Are you investing in the SMCIs, which is like the kind of the not storage. What am I trying to say there, Steve? Basically the backbone that all the chips kind of feed into, the servers, etc.
I mean, yeah, you got transportation in the midstream with the refining and the storage and the treatment for the NGLs.
Yeah. So I mean, it all I like to look at it in disparate sort of things, and each of them have their own pluses and minuses. So, but I mean, I try to stay away from sector ETFs personally, because if there's a company that I like, I'll just invest in the company I like rather than trying to be blanketed in a robotics. Like a robotics ETF, for example, half of those companies are probably going to zero. So the robotics ETF is likely to underperform if you choose the right opportunity. Now maybe you have some ones that are specifically hyper focused on the top 5 or top 6 robotics, and they end up outperforming. But I'd say more likely than not, when you get in some of these speculative ETFs that are sector focused, they often underperform if you were to just find the top 3, 4, 5 companies in that particular sector. So just you take that with a grain of salt. I don't know what XLE looks like, so maybe it's a great opportunity, but I'd prefer to find the companies that I trust.
Yeah, I don't hate that. I don't hate that at all. Dude, put the sign up already. Thanks. Good day. GD 4400. Thank you.
What sign?
The sign will be going up. I need to order the stuff to put it in the wall. It'll be going up.
Hopefully, somebody send you a sign?
I showed you the sign, didn't I? The Milk Gang sign?
Steve, are you holding out on me?
Matt, I showed you the sign. Don't do that.
No.
Yes, I did.
Like the cookie logo?
No, the freaking Milk Gang established 2025 sign that freaking glows in the dark and stuff.
You're bullshitting me. You did not
I'm
show me
not
that.
bullshitting you. I showed you the freaking sign.
You never showed me the sign. You're holding out on your boy. It's fine. I'm taking notes, Steve.
Oh my
Did you
God.
show the stream?
Hold on.
Did you show the stream?
I swore I showed this to you.
You're holding out? Did you show the stream though?
Yeah, they all know about it.
Everyone but me. So I'm just sitting here.
I've showed it to you.
Dude, get the fuck out.
So we can do red on red days and green on green days.
I need to get one that says White House Quant. Did you buy that or did somebody send it to you?
My nephew got it for me.
What a good kid. Good role model.
He's a great role model.
He's a good kid.
I
like
mean,
it, Steve. Congratulations.
the amount of Roblox I buy him or Robux I buy him, I should just invest in the company.
True. I'm like eating this camera. I need to sit back.
I can't believe I didn't show that to you. I thought I did.
I was traveling a lot. So
Yeah, maybe.
Somebody said in the chat I was traveling.
Sid, thank you very much. Just won 500 on Kalshi. I feel rich. What did you bet on? Or wrong terminology. What did you predict on? And then
Steve, when are we getting on CNBC? Sorry.
Thoughts on a portfolio structure of 40% NVIDIA, 30% Rocket Lab, 30% Palantir. The only thing I'm going to say is you better hope the market doesn't go down this year.
Yeah, I mean, if they're investing for 2026 only, that's going to be tough. I'd be scared shitless, but if you plan on holding it for a long time.
Yeah, I mean, quality companies obviously love Palantir, love NVIDIA. Rocket Money has been doing really well. It's been printing money, even though it's not called Rocket Money.
If there's any recession or sign of slowdown in the broader AI market, Palantir is going to take a dip. And I kind of hope it does because I'd love to buy more. But I see Palantir, base case, it's $1.5 trillion company at some point. I'm not talking tomorrow, guys. You know me. I try to look at 2035 and beyond, but could be 3 trillion. Could be.
So may I read something?
Is it what you read me earlier?
So
make Steve read to me. Guys.
Yeah, can I want to read it to the chat and see what they think because it pertains to stocks.
Yeah, please do.
All right. So I got triggered before everyone, and I do have a new investment idea that I will get to in a moment. Okay.
On Sunday, or is it a Sunday thing, or is it for the bigger portfolio?
No, it's for the bigger portfolio.
Ah, Steven. All right, we're having fun.
Where's his freaking tweet? Oh, here we go. All right. So I got triggered by this, everybody, and I wrote a response, and I have not sent it yet because I'm a little shook to send it. So Tyler Winklevoss came out and said the failed state of California, led by butthead Gavin Newsom, is so desperate to feed its money pit grip machine that it wants to steal the Bitcoin you hold. California is over. So California Governor Gavin Newsom has signed a bill allowing the state to transfer custody of any Bitcoin or cryptocurrency held on exchanges after 3 years of inactivity. Under the law, inactive accounts on centralized exchanges are classified as unclaimed property. I got a problem with this.
Take the politics out of it.
There's no politics.
There's no politics, Steve. I'm in 3 years. If you don't touch any of your QXO, I'm coming to grab it.
Right. Like there's no politics of this.
That's not politics. That's just like, don't fucking do that.
Sorry. This is my opinion. Okay. I'm not looking to trigger anybody, but I really thought about this. I reread part of the Constitution before I wrote this. Now I haven't freaking posted it, and I'm probably going to do a poll to see if I should. I don't think I should, but I'm going to read it. So this is what I texted to Matt. And this is the toned down version. I believe this is a dangerous precedent being established. The idea that after 3 years of inactivity, the state can require centralized exchanges to transfer custody of your Bitcoin/crypto to a state designated custodian under unclaimed property rules is ridiculous. I disagree with this for 3 core reasons. Inactivity is not abandonment. Long-term holding is a legitimate investment strategy. I didn't log in or I didn't trade does not mean I give up my property rights. In my opinion, this would raise serious due process concerns, 14th Amendment. If the trigger is no activity and sometimes even undeliverable messages, then the people most at risk are the ones least likely to receive effective notice. A post hoc claims process isn't the same as meaningful notice and a real chance to be heard before the state moves your assets. If I read the US Constitution correctly, this looks and feels like taking, and the Fifth Amendment should be applied to states via the 14th Amendment. Even if the state calls it custody, forcing the transfer of a specific asset to a government-chosen custodian strips the owner of control. In my mind, this would be bundled into property rights. This is the last paragraph, everyone. Just give me 30 seconds. Here's the slippery slope, and this is what everybody should think about. Here's the slippery slope. Once the principle is established that inactivity equals unclaimed, which equals state custody, it's not hard to imagine the same logic being extended to other intangible property. Equities are also intangible property. Brokerage accounts already operate under a similar framework in many places. If lawmakers decide inactive brokerage accounts should be swept more aggressively for consumer protection, you've just normalized the idea that the state can step in and take custody of financial assets because you weren't active enough. Property rights shouldn't expire because you didn't log in. Now, the reason that I did not post this is because I'm not a lawyer, and there's probably like so many other things that go into this that I haven't looked into that people would probably come out of the woodwork and prove me wrong on certain things. But this is truly the way that I feel. This is a slippery slope. And to me, it's certifiable ridiculousness.
It is insane, man. And you put it way more eloquently than me. I go straight for the jugular and I just say, don't effing do this. But you have a lot of good points in there that I think hit home. And I hope anybody that is thinking that this is a good idea rereads what you stated about how many different laws and acts and everything that it is completely neglecting. I just, all this so that the government can spend your money inefficiently. Like, it just doesn't make sense.
So, like, here's the thing. What if you open up a freaking IRA and you put money in and you just put it in S&P and you don't log in? You're 25 years old, 30 years old, and you just don't log in because you're like, I got inherited some money. I hit the lotto. I made whatever the thing is. I'm going to put X amount of money in, and 30 years from now, I'll have a couple of $1 million in there for retirement. So you're telling me this person can't buy X amount of the S&P and just let it sit there and then one day open the account? And it's ridiculous. I'm sorry.
I have things in EquiShares that I put in like 8, 10, because I used to be really big into direct stock purchase programs. So I used to do stuff through like computer shares. Then they used to do something called like, I forget what it was, but now it's called EquiShares. I think it's probably changed its name again. But it's like some small amount in Procter and Gamble, McCormick, etc. I lost the account, so I got to figure out how to get my accounts back. But I lost the account numbers. But like I haven't touched those for 5, 6, 7 years, and they're just gonna take it. Like, it's not a lot of money, but it's a couple grand. Like, I'd be like, what the F? I was hoping that, if I ever needed a rainy day fund, that I'd be able to call up EquiShares and get my money, but apparently not. Apparently the government's going to try to take it.
Yeah, and I know that some banks and everybody in the chat's correct, and that's why I did not post this. I completely forgot until now, you're 100% right, that some banks will close down a checking account if it's inactive for X amount of time. You're 100% correct in the chat. I completely forgot about that. That's one of the reasons I didn't post it. But to me, it's unethical because if you're going to allow somebody to open up an account, place money in there, it shouldn't matter if I log in or not, especially with a bank, because if there's a deposit there, the bank's lending that money out and making money on it. They have no reason to close that out. It's insane. That's the whole premise of banking and them making money.
I think some people brought up some really good points. I mean, is this like unclaimed accounts that like they're going after people that are dead for 10, 20 years that are just sitting around and nobody's claimed it and they haven't moved to different, inherited IRAs or something like that? Like, is that what they're trying to go after? Is there some sort of like specific accounts that are like have hundreds of millions of dollars that they're trying to just grab after that have been dormant for like 50 years? Or is it just like blanketed any brokerage or anything that has been not touched for 3 years or trying to get after?
I did not look into it. That's why I really didn't post it. And the only thing that I saw in the 2 minutes I looked at it was it's a 3-year timeline. And once something is dormant for 3 years, they will look to put it in a state-run custodian. I just think it's unethical because if I sign up to a exchange to buy crypto and my idea is to hold it, I just think it's ridiculous because I would think that that is my property. Maybe it's not. I don't know. I didn't read the terms and service from different crypto exchanges. So maybe it's technically not your property unless you self-custodian it and putting on a Nano X or something.
Is this particularly for one state or is this a federal thing that they're trying to?
No, it's California.
California. Okay.
Yep. But it's a slippery slope, in my opinion.
Right here first. No, it is a slippery slope. It's just like the billionaire tax,
I mean, that's one of the dumbest things I've ever seen.
I mean, to which I'm actually kind of curious now, like how much in the long term, because of the billionaire tax and everybody and their mom moving out of, like, you had Sachs move out, you had Thiel move out, you had so many people now move out. Larry Page has moved out.
Well, let's think about the companies. Tesla moved their headquarters. You had Oracle move their headquarters. You had Palantir move their headquarters. You had Hewlett Packard move their headquarters. And then you had the billionaires that you just listed all leave. At some point, more will leave. And the people who remain are going to be the ones left holding the bag. It makes no sense.
People that are sitting there like, you should be for the billionaire tax. Maybe I shouldn't get so political. And if I am getting political, Steve, please stop me. But to me, I foresee that billionaires can't spend enough, right? At some point when you spend, like if you spend $100 million, there's nothing else for you to buy. Maybe at most you could spend $1 billion. So what are they going to do? They're going to take that money and probably reinvest it into something like creating a rocket industry, like Blue Origin or SpaceX, or look what Elon did when he sold $200 million in PayPal, and he put a large chunk of it into SpaceX. He put a large chunk of it into to Solar City. He put a large chunk of it into Tesla. Look what that has generated in terms of additional jobs, new cars, making industries more efficient. That's what real billionaires do. Yes, there's going to be the crooked guys that really are only doing it to buy yachts and stuff like that. But I think there's more to be gained out of creating jobs and other things that will create more tax revenue in the long term than just stealing money from the Teslas of the world. And people might say, for example, oh, but Elon borrowed however many millions of dollars to be able to, but that's all been repaid. Yes, is he, was he getting subsidies to sell Tesla cars? But think about how much money in taxes all of his employees have made and how many hundreds of billions of dollars in revenue Tesla has generated over the course of however many years, like, and how much it will create. So I don't know. To me, I just think, it's part of the economy. If you want to stipend growth, then tax the crap out of it. Then eventually you're going to have deflation. People are going to move. Look what happened to London. Look what's happened to so many countries and cities that have implemented these billionaire and high tax rates. And look what happened in California. People are moving to Texas, people are moving elsewhere. So to me, I'd much rather have them have that money. And yes, maybe some of it just sits in a bank somewhere or sits in the companies. But Elon, in my opinion, has been reinvesting that money into things.
Yeah. And here's what I want to add to that. You guys know I don't like getting political. Okay. I'm a libertarian and I really don't like getting political. I try not to talk about political views. I'm not going to talk about political view. What I'm going to talk about is the reality. Okay. And this is the reality of implementing a billionaire tax. One, you disincentivize innovation. Facts. Two, you have a government that is now going to come up with some type of algorithm between either revenue or EBITDA to put a multiplier on it to figure out a value of a private company. And you may have the founder who makes 300 grand a year, but has $1 billion worth of stock locked up because he owns 40% or 50% equity, or she owns 50% equity in the company. And then you're going to make them sell X amount of the company to private equity because now you just force them into this 5% tax. It also creates a situation where you are going to make people leave the state. And if this becomes a set precedent, the way that I discussed with the custodian of Bitcoin, here's the problem. In 10 years from now, what happens if they decide to go to people that have 100 million in assets and then down to 10 million in assets because they need more, and then 1 million in assets? Remember how income taxes started? It was only supposed to be the very top earners, and it was only supposed to be for a certain period of time. Obviously, we saw how that worked over the past 100 years. Now, if we don't think that they will not stop at 1 billion, we are crazy, because we've already seen this play out. And I am nowhere close to being a billionaire. Okay. But the reality is that people that are successful typically invest, and a lot of them build companies in the private markets that create a lot of jobs. I want the strongest and the most robust economy for Americans, for people to have a great career. You're not going to get that putting a tax on billionaires, because guess what? A lot of these billionaires will say, I had a great run. Maybe I'll just retire and hang it up. You disincentivize people to build. Not to mention, I would be very worried about them now bringing that threshold down. And what happens in 50 years from now if they were to bring that threshold down and it gets down to $1 million? Think about this. What's the median price of a house? If you have, let's just say you have a house for 700 grand and then you have a retirement account, you got this, you got that. Technically, you're a millionaire, but you don't have $1 million in cash. I mean, the concept just doesn't make sense to tax unrealized capital gains. I am firmly against it, and I am firmly against putting a number out there, considering the money's already been taxed. It's just crazy. You know, we are so taxed from the money that we make to the money that we spend, and now we may have a sliding scale on this. No, it's crazy. So
insane.
It's insane.
It's wild. But you said a statement in there, Steve, that I don't 100% agree with.
What?
You said you're not a billionaire. I'd say you're closer than you're letting on.
I'm definitely not. It'd be nice if I was.
You're definitely not. You wouldn't be talking to me if you were.
No, I would be talking to you, but you know, it would be in a different situation.
Dude, people are saying Stevie Fiorillo, 2028.
I mean, listen, I like to think that I have a level head, and I like to think that I look at things for what is best for the economy when I talk about things. That's why I've always said it. To me, I care more about unemployment than I do inflation, because the reality is if you have 2.5 or 3.5% inflation, it's not stopping anybody from buying anything. And the fact that we're squabbling over rate cuts with an inflation number that really doesn't fucking matter is insane. We should be making sure that there are enough jobs, good quality jobs for Americans. And it is disgusting that we get hung up on a number where in the real world, that number is not stopping anybody from buying anything.
Right here first, Steve.
It's just crazy.
People are asking, I don't know if you want to move on to this, but the tariffs happened today.
Did you happen to see the trade deficit by any chance?
How it's the lowest since 2009?
Crazy.
What is it? Only 29 billion for the month?
Crazy. It's crazy is what it is. Anyway, I have a new investment idea. We can move to that. We can move to something else. You tell me.
I want to read. People are talking about the tariffs. There's 3 things that happened today.
Yep.
J&J got an exemption deal from the Trump administration, basically saying that their pharmaceutical tariffs are exempt. So they can sell basically medicines directly to Americans at significantly discounted rates at trumprx.gov. And then they're basically building 2 manufacturing plants in North Carolina and Pennsylvania, which is, I anticipate, the reason why is they're building in America. There you go. Kitchen, I guess what people are dubbing the kitchen cabinet tariff delay. So the administration decided to delay a scheduled tariff increase on imported wooden cabinets. So Steve, boss lady, you need new wooden cabinets. A scheduled increase would have been raised on tariffs.
Cabinets are expensive.
They're not cheap, Steve.
Oh my God. We had somebody come in, and when they told me the price, I could not believe it. Could not believe it.
What are we talking? Do you want to disclose?
I don't want to disclose. It was freaking crazy.
All right. Well, to help you, maybe the raised tariffs on imported kitchen cabinets to 50% has been pushed back, which it currently is at 25%. So fingers crossed that happens. And then there's the 500% tariff green light on Russian sanctions. So it's not an executive order yet, but Trump basically is now creating a bipartisan deal that is sanctioning Russia of 2025, which now obviously carries into 2026, a 500% tariff on goods from any country that continues to buy Russian oil. So mostly aimed at China, India, Brazil, who have all been buying Russian energy. And I believe that India and many others are scrambling to stop using or get off of Russian oil for that particular reason. So that basically increases the likelihood that bill is going to pass. And then they obviously have to choose either US or Russia. Maybe another reason why VG is up today.
Could be.
I think India uses a lot of natural gas from Russia. So if they can't be buying Russian gas, and India, if anybody hasn't really understood this, India is currently at a good balance for their energy needs. They import a little bit for LNG, but in the next 10 years, India, their domestic production is going to fall off a cliff in probably 26, 27. So the next 18 months or so. And then after that, I mean, their energy demand is going to continue to increase at a massive pace. So unless they bring on more volume, which I think, anything in oil and gas, if you start today, especially offshore, shallow water, it's going to take 5 years, even if you hit the go button today. So they're in a massive shortage right now, unless they develop things off the coast of India, on both the West Coast and East Coast. And I'll stop there. I'd go off on a tangent if I wanted to, but I'll hold back.
You could keep going. Keep going.
No, I don't think I should.
All right.
I can't speak too much on certain things.
Yeah, no. Maybe we should get you off that topic.
Yeah.
All right, Matt. I'm going to make an apology.
That we're still not at 7,000, Steve.
Yes, well, okay, that wasn't the apology I was going to make.
I don't know why. It's so funny. It's probably so old. You're like, why is he still bringing it up?
Yes, sorry. Matt, I'm sorry that I lied to you. The
Thank
S&P's not at 7,000. I apologize. But to the community, I apologize. And maybe I'll make a video because I am now bullish on a company. 4-letter company.
Ticker? You mean 4-letter ticker?
I
Or
want
company?
so I looked at the numbers again with a fresh set of eyes, and I started doing some research. And it just so happened that I listened to an interview this morning on my way to the office between Dan Ives and a certain CEO from CES that
Oh,
happened last night. And when I heard that this CEO walked into the boardroom, is anybody somebody got it? I'm not going to say who, somebody got it. And when I heard that this CEO walked into the boardroom and told them that he was taking 400 full-time engineers offline, and they were going to go from 50 million a year in EBITDA back in 2017, I believe, if I remember correctly, to making nothing for 2 or 3 years. And the room went silent, and he just said, "Trust me, this is the future of the company." This guy's got vision. And I got to tell you, I think the community was right on Zeta, and I was wrong.
what are they generating in EBITDA now?
I don't even remember. I can bring it up. But it was a really interesting interview listening to it. And the fact that their customers, for every dollar they spend, they make back 6 or 7, he said. And it's a true partnership with ChatGPT to power this. It's really interesting. I'm not fully done on the due diligence. I do like it a lot more. I'm going to bring up the numbers right now. And the other thing that he said to me, which made me feel like this was SoFi-esque, is that for the past 17 quarters, they beat estimates and raised guidance, which is interesting to me. So I'm looking at it from a new line.
So to help you out here, Steve, so full year 25, they're looking at about 275 million in EBITDA actuals, right? So about 90 million a quarter is where they're supposed to be for fourth quarter. That represents about 42% growth year over year. And next year, they're aiming to be at about just under 400 million in EBITDA, at about a 22% EBITDA margin. And that's basically a 40% growth. So they're basically claiming that they're hitting the rule of 40 on a free cash flow basis.
And their net dollar retention is 114%.
114 is not bad.
It's not bad.
It could be better. Is it trending up or trending down? Do you have that graphic?
Which graphic?
There's if you want, maybe this will help you. Do you mind if I share a Palantir graphic?
Not.
So, shit.
I mean, it's a high margin business. It's starting to become profitable. The numbers are interesting, but the forward numbers are more interesting. And when I talk about companies for the future, I don't understand marketing. Okay. It's not a space I really understand, but listening to his interview, I'm going to try to listen to 1 or 2 more firesides. Now, I do know that they hired somebody that has a really big history working at Microsoft and Meta. I think it's one of their head product people. It seems like there is a lot of room for growth in this company.
So here's an example of how I trended Palantirs.
Okay.
And maybe it's something you want to. So if it's accelerating, like it's going from like they're at 114 right now.
I don't know what the last quarter was. He just said their net dollar retention is 114%.
Yeah, I'm just saying, like, if you wanted to get more into the details, maybe you could see if they're accelerating that or decelerating, or because that was a big thing when Palantir basically went public. Everyone was like, "Oh my god, their net dollar retention's like 190% or whatever like that," because people were just getting involved and their fingers in it, and then it slowed down all the way to 107. And I think a lot of that was the European companies. But I don't want to get into a Palantir discussion, but that was something that I was concerned. Sachin was concerned. A lot of people are concerned. Like, you're about to start losing customers, right? Or losing year over year revenue from people, because it did a dip all the way there, and then it obviously turned around. So
Yeah, so taking the actual financials out of it, they're expected to do 67 cents of EPS this year, which would put them at a 34 PE. Next year, they're expected to grow EPS by 47%, and then by another 22.5%. A lot of EPS growth, trading at 23.5 times next year's earnings. And the revenue projections, I mean, they're expected to grow 34% next year. This is a company that, if they can increase net dollar retention, and if this Athena product is as good as what they are saying it is, these numbers may not even be accurate. So I need to look more into it. It is definitely on the short list of things I want to start a position in now after listening to that CEO. Endicott Invest has the net dollar numbers. They're trending upward. He said that they only go up once a year. It was 110% Q4 2023, 114% Q4 2024, and they will be giving the new number on the new earnings call. They only do it once a year.
There you go, Steve.
Yeah, look, it's interesting. I don't own it yet. I don't know if I'm buying it. It's a lot more interesting after listening to their CEO than it was just looking at the numbers and just looking at it as a small company that maybe it can do something, maybe it can't.
Is it going to be part of your $10,000 portfolio?
You know, it could be. You know, we may buy 100 shares on Monday as part of that portfolio.
A little covered call action.
A little covered call. Maybe we write cash secure put on it, test the waters. I don't know. We could. I got some things cooking in the brain for that.
Steve's over here in front of the stove.
Dude, I'm just trying not to get burnt.
That was gangster.
Just saying.
That was gangster. Oh man. Interesting one on that.
Yeah, I'm actually gonna put in the I don't want to listen to it again right now, but I am putting it in the comments section, everyone. It is worth a listen. Dan Ives is dressed the way Dan Ives is always dressed. He freaking dresses great. Talk about a gangster. Dan Ives dresses great. I wish I could pull that off.
Went to Penn State. He's a good guy.
I mean, seriously, look at this.
Some may say that those that go to Penn State are good people.
I'm just saying, I wish I could pull that off. I can pull off the pink hat. I can pull off a pink shirt. I can't pull that off.
I can't pull that off.
I cannot pull that off.
I can't. If I had that Steve money, maybe I could. But
I mean, listen, if I had your money, I'd donate mine.
You say that, but
I mean it. I mean it. So Zeta.
Sorry. What about Zeta?
Yeah, and look, this is a company that could be an early stage, and I know it's run just a little bit. It's around 22 a share. You hold it for, if I'm looking at this where AI takes over for marketing, and this is really going to be the top product, I mean, who knows? This could be a company that really breaks out. And it's got 10% short interest. Why? 5.7 billion market cap, 10% short interest. How much fucking debt do they have?
People are saying you can't dress like that in the White House. Watch me.
So this doesn't make sense. Why would you short this company? They have 197 million in long-term debt, but they have 385 million cash on hand. They have double the cash on hand in long-term debt, and they're EBITDA positive. Their operating income positive. It looks like they're on a quarterly basis breaking even, more or less. And what are they on free cash flow? Last quarter they did over 50 million in free cash flow. So
yeah, it's looking healthy. Very low capex.
This is not a company that looks like they're going under. So maybe people think the valuation on less than 200 million in free cash flow is too much at 5 billion. But once again, 5 billion valuation, this is something that could grow into it. So I'm getting very interested in this.
Let me see. Based off the numbers that you told me, 5 billion market cap on potentially 400 million in EBITDA next year. You're not talking crazy people.
Not crazy.
You're not talking crazy people money.
No.
You're not talking crazy valuations, and especially if they're going to be able to continue to grow that. Not crazy.
And you're not talking about a company that's indebted. And this is even great. Look at this. Shares outstanding. They're not even really diluting shareholders, Matt.
That's a big thing.
Look at this. Right here.
Not crazy dilution.
No, over the past 5 quarters, it's roughly flat.
Yeah, not crazy dilution.
No.
Steve's bullish.
I need to do a little bit more research. So say yes if you are in Zeta. I'm very interested.
I don't hate it. One's in the chat for Zeta, zeros if
one's in the chat for if you're in Zeta.
If Uncle Steve should find something else.
Are they buying back shares? Really? Hold on. Let's go to the cash flow statement.
Oh, some people like it, some people don't. Some people putting 2, Steven. I don't even know what 2 means.
They're buying back shares every quarter.
They're trying to offset dilution. That's pretty good.
And they're repurchasing way more shares than the issuance of common stock.
Well, apparently good old boy Tanner said no bueno.
Tanner's here?
No, but somebody said, so it might be hearsay, but maybe you message him, and if not, maybe you do a little stream with him or show up on his stream. He does one every day at 1 o'clock.
I'm in the office then, so I can't do that, but
you can always call in.
Can always call him.
Call Tanner right now. Tanner's in the sauna.
Tanner's definitely he's the one that goes to the gym in Vegas and goes in the sauna.
He's been lazy this week. The guy's doing DD for you guys on the ground. God forbid.
Same way I did DD on the ground at the casino.
Steve had to do it. He had to check out if it was the real deal.
Had to do it. See how the consumer's doing.
Somebody super chatted, Steve. So to follow outside of the energy sector, would you position into the defense sector as well as for 2026, 2027 instead of NVIDIA, Rocket Lab, Palantir?
I have no idea. I mean, I don't really follow the defense sector that much. I mean, I like Lockheed and Raytheon, but I just don't know enough about those companies.
I don't know, man. I mean, I it's tough. I don't know what your goals and objectives are. Like if you're looking strictly for 26, 27, that's tough. I mean, I look at things like where they're going to be in 10 years time and what valuations could I potentially pull off from that over 10 years time. And what value that might be worth.
Wait,
so it's not really my game.
Hold on. In the streets, that cannot be true. And Mick got kicked out of a nice hotel. He was streaming from a Motel 6. That can't be true. How do you get kicked out of a hotel in Vegas?
Maybe he was saying good morning too loud. Let's call him.
No, I think they're at dinner with Triple V.
Anywhere? No, never mind. We don't need to.
No, I'm pretty sure he said he was going out to dinner with Triple V, his wife, and a couple of people tonight.
That's awesome.
Yeah,
I was going to ask where, but it's probably not prudent to ask where in the middle of their dinner.
Yeah, no. Um, so Chels is saying she doesn't know if he got kicked out, but he was streaming from a motel. June is saying he still kept Davis in the new room. All right, who knows? I will find out from him over the weekend what happened. I'll report back. He moved hotels, didn't get kicked out. Okay.
Oh, that sounds more likely.
Mick gave the hotel the wrong dates. Oh, he's here.
He said he got kicked out for ringing the bell.
No, you didn't, Mick. Did you?
Did you actually? It's a fucking gangster if you did.
Oh my god.
He broke the headboard. I mean, when in Vegas. I'm actually kind of curious if he actually did get kicked out of Fritz.
Yeah, I'm actually interested. So I don't know, Mitt, if you heard, but I listened to Ives' interview with the CEO of Zeta, and I am getting very interested now. Very interested. I think that this has got a lot of potential.
You never know, Steve.
Never know.
Never know. So that's good. I'm glad you're exploring your horizons. If you were, I mean, I'm not gonna say like a dollar amount, but like, would this actually be something that you grow into a decent sized position in the portfolio? Are you looking for something like that, or are you? Because you noted that you in 26 you might be trying to consolidate a little bit, right?
Yeah, look, at this point, it's hard to find a new position to make a decent part of a portfolio. I think if you're in your 20s, it's a little easier to pull that off. But I mean, if you're going to consider an overall portfolio that's got retirement accounts and other types of accounts, I mean, it's hard to make something a decent size without taking a sizable position and having a lot of conviction in it. I mean, I would definitely make it worth it to put it in there, but it depends. Is it going to become 10% now?
So, silly question. You don't have to disclose this if you're not comfortable. I mean, excluding the dividend portfolio, because that's kind of has its own legs, and for the majority of the portfolio, and that's also a smaller portion, I believe. For the larger part of the portfolio, retirement accounts, etc. I mean, what are some of these larger positions? Are they 10%, 15%, or do you never really let them get above 5%?
I couldn't even tell you. I'd have to put everything in one master sheet and do it. I've never done it.
I'll do it, Steve, for $10.
I've never done it.
$10.
I've never done it. I don't want to do it. I just know
why not? Because you know that. Dive deeper on that. Why don't you want to do it? Time consumption, or just because
4 hours and go through all the accounts and actually, because think about it. I'm sure I have NVIDIA in 5 accounts.
Yeah, I have Palantir in like 3.
Well, exactly. So having to consolidate everything on a spread, it's just annoying.
So you're not doing it because you're afraid that you'll see, just throwing a number out there, or
no, I know what I own, and I know how much of what I own. I just haven't done an exact percentage. I know around about off the top of my head where everything sits.
Okay. So you're not sitting there like, oh shit, it's actually 15%. I need to trim.
No, I mean, if something's around, let's just say hypothetically, something's 10%. In my mind, I have it at either 8 or 12%. Like I'm not so far off where it would matter.
Okay. No, it's okay. I mean, I used to be more like that as well, like where I wanted to kind of keep my positions in smaller.
Look, it becomes easier if you exclude IRAs and retirement accounts. But you can't do that because you have to think about your entire portfolio as a portfolio, because your retirement accounts are real money too.
I agree, man. They're not small. They're definitely not. And I have a pension account as well. So if I were to include that pension account, if that had to get liquidated, say I left early and cashed it out, Pretty nice nest egg. I'd probably put that in the spy.
Nothing wrong with the spy, man. Love the spy. I was thinking about grabbing a couple shares of the spy for the challenge, but then I was like, I don't know.
You could buy 1 month out calls like me.
I mean, I wouldn't be surprised if you do some of that stuff.
Silly question for going back, and I don't mean to take anything away from the Sunday's conversation that we're going to have.
Yeah.
But are we going to restart at 10,000 every year if we keep doing it? Or are we going to continue to
We
grow?
could.
Donate it to charity or something? I don't know.
I mean, we could
Donate to
restart
chat?
it every year.
I don't know. We'll figure it out. We don't have to come up with it today.
Yeah, I mean, I wouldn't be, look, I would not be opposed to donating a percentage of the profit to charity.
Could have donated to your cabinets because apparently.
No, they're all done, but it was, anyway.
Interesting. So Zeta, I mean, was there anything else that really surprised you?
Look, I was surprised at hearing how they got to where they were because I did not do the due diligence. Look, there's things that you can't learn on a balance sheet. And look, a lot of people give Dan Ives a lot of shit, but he is right. You can't find AI in a spreadsheet. And I think that methodology holds true to a lot of companies where the financials are just the financials. It doesn't tell the entire story. And when I heard this fireside chat, it made me want to go back and listen to, instead of reading, the Q3 earnings call because I want to hear the energy. And I'm going to be paying very close attention to Q4.
Interesting. We got apparently some inside information.
Yeah, I see this Heinze ketchup. I don't want to know anything. So
the only thing I want to know, Steve, is if you're playing me, keep it on the low.
If what? Did
You're
you just say what I think you said?
Because my heart can't take it anymore.
Jesus. Maddie. Crazy.
Interesting. Zeta making me think.
Yeah, gap profitable soon. S&P 500 inclusion 2027 maybe. Who knows? I'm just saying, for a 2 or 3 year play, it probably doesn't suck. Oh, can we, in the streets, can we not get him on this freaking tangent? Say it.
No.
You know who Matt Rife is?
That name sounds so familiar.
He's a comedian.
Yes, I think I know exactly.
I gotta send you a clip. Just remember those 2 words. Say it. I'm gonna send you a clip.
Say it.
You will freaking die laughing.
Interesting. And did you watch any other CES things that got you super bullish? I haven't watched any CNBC.
It was legitimately because that just came into my algorithm this morning. Otherwise, I would have never heard it. So maybe it happened for a reason. The only 2 things I heard was Jensen and Lisa said.
Oh.
What's up?
Did you see Uncle Tom saying a mid-year pullback is likely?
Yeah, I saw that.
What do you have to say?
I mean,
let's see what other headlines are out there.
I wouldn't be surprised if we get a 10 or 15% drawdown, but at the same time, I mean, I still think we go to 8,000 this year.
Hit 7,000 first, Steve. Gotta hit. How far?
Well,
so the $200 billion, before we move on to whatever you're just about to bring up, do you think that's actually going to be hugely? I mean, obviously QXO is about big on it, but I mean, we're talking about a couple tenths of a point. Like, what do we think is actually going to happen, or do you think it's mostly going to be a fart in the wind?
No, I think it could help out a little bit, especially in an environment where rates are coming down. So I think it's bullish. I think it's bullish. So Matt, can I read you something?
Please do. I like to be read too.
So, well, if you like to,
Oh,
listen, if you like to be read to, okay, I got something for you to listen to.
I mean, before you start that, guess who said that QXO is a buy?
Who? Me?
Jim Cramer.
Stop it. Don't even do that.
We got to pull it up. We got to listen. We got to listen.
Don't do that.
We got to listen.
We got to
Why'd you say?
listen. We got to listen.
I'm sorry.
Pull it up.
I'm sorry, Steve. Do you know if we get demonetized for?
CNBC. As long as it's CNBC, no, we're good.
Okay. Here we go.
You got to turn it up a little on the video.
All the way up.
And then the lightning round is over. Are you ready, Skinny Daddy? Time for the lightning round. Crazy Red Super Jeff reporter. Jeff.
Booyah, Jim. Apollo Group invested $1.2 billion in a convertible preferred in QXO. Is that a floor and is it a buy?
I think it's a buy because it's Brad Jacobs, and you can't bet against Brad Jacobs. They do have a 10% short position. I tell you, while I'm not just pounding the table because it's all the way up, I think it's a buy. Let's go to Joe in Iowa. Joe.
What's Joe got to say? And then I'll.
Jim, you and my spec are both going to be at the JPM conference this next week. My stock
so.
ticker VKTX.
I don't care anything about VJTX, but there you go, Steve.
I
You
mean,
selling?
does this now get the Kramer curse?
I was about to say, you gonna sell?
I don't know. I'm a little shook.
I'm about to
A little
post.
shook.
R.I.P. Steve.
All right, everyone. We had a good run.
We had a good run,
apologize.
everybody. Shout out to everybody that was following Steve into that one.
We had a good run. I apologize. Kramer just screwed us.
Yeah.
It is over.
Let me get Ken in on this too.
Oh, God. What, are you sending the link to Ken?
What the hell? Did Ken change his thing?
What do you mean?
His at? Did he delete his X? What did he do?
No, he's still on there. He should still be on there. Send it to him on WhatsApp.
Is this the same Ken? What the hell? Anyway, what were you before I cut you off?
Anyway,
I had to see. I saw that and I had to get your thoughts.
So 2 things. One, have you ever listened to a book on tape?
On tape or audio?
Yeah, book on tape. Freaking digital now, but books on
Yes,
tape.
digital. Yes.
Okay. Go to Audible. Download The Gold Coast and listen to that book. You want someone to read to you, you want to listen to that. Has anybody in the chat read The Gold Coast by Nelson DeMille? It is phenomenal.
What's it about, Steve?
You know, Matt, you just got to trust me. You just got to trust me. It's amazing. So anyway, I want to read you something. You ready, Matt?
There it is. It's underscore finance Ken. That's what I was screwing up. Sorry.
You know my dividend harvesting portfolio I write on Seeking Alpha every week?
And you also released an article today on that.
I did.
What about it?
All right. So in 2024, the dividend harvesting portfolio finished with an account balance of $25,026.44, generating $1,932.03 in forward dividend income. Okay. 2025 has come to an end, and the dividend harvesting portfolio's account balance has increased by $8,522 $2,200.26, which is 34.5%, of which 5,200 was newly added capital and $3,322.26 was a combination of dividends and capital appreciation. The forward dividend income increased year over year by $779.14, which is 40.33% to $2,711.17. Not a bad year at all for the dividend harvesting portfolio project.
That's pretty interesting. Some questions.
Yes.
Were you hyper focusing on higher yielding things, or was the yield about the same of everything that you were investing in?
I'd say there's a mix. I mean, I was buying One OK at times. I was buying Realty Income at times. I was buying Verizon at times. I was also buying ARCC at times, GPIQ, QQQI. It was kind of all over the map, but it's very diversified. And it is now generating just over $2,700 in forward income after putting $100 a week in every week.
I love it.
And I want to show you one chart because this chart is so freaking cool. This December, look at that. $269.39 in dividend income this December.
This was always my favorite graph to make when I had my dividend portfolio.
It is so cool. And this is a side project for me, everyone. I've been doing this for just over 5 years now. And I've been putting $100 a week in. Every week I write an article on it, what dividend income is generated, what I'm investing in, and I've documented it every week for the entire series. And the dividend income is now over 50% of the annualized contributions to the portfolio. It's pretty interesting. I'm excited for this year to see what happens.
What's the forward 12-month income?
2711. And then Maddie, check this out.
You are over. So the thing that's really cool, right? So you're adding $100 a week.
Yep.
That's on average $433 a month. Yeah. You are now averaging $225 a month. So that alone is over 50% of what. So basically, at this point, after a good 5 years, you're now getting back like 50% in dividends of what you put into it. It's pretty badass.
Hold on, Matt. You know what's funny? I love these comments. What a waste of time. Okay, he's no billionaire. Yep, no shit, I'm not a billionaire. That's one. Two, what don't you understand? This is a side project that I do every week to write on Seeking Alpha for people who don't have a tremendous amount of money to throw into income stocks, but want to do a dividend portfolio. It's amazing that people are, as I have these comments all the time, like, oh, why am I? Don't listen to me. I could care less, but also don't think that this is my only account.
I think a lot of people neglect the fact that you need to build a financial house brick by brick. And I think a lot of times people assume that you can get there in 6 months to a year by investing. And those are the people that are going to retire with nothing in their hands. So, unless they get there's going to be the fortunate, maybe unfortunate, depending on how you look at it, people that get lucky. And part of it is luck as well, but you need to put yourself in a situation to get lucky in order to actually have meaningful, right? Like some people like Matt got lucky on Rocket Lab. Matt got lucky on Palantir. Well, you know how many thousands of dollars I had invested in those companies. Like you can't just put in $5 and just be like, yep, if they go up 20x, it's like you that's $5 and you 20x, you're getting $100. You know, like there's a difference between putting yourself in a position for success. And to be fair, not everybody has, you know, a $3,500 a month to invest in SPY like me. You know, there's people out there that even $400 a month is going to be tough. And that's exactly what Steve is demonstrating in this portfolio. But if you keep in mind what it's showing now, that person can have a free cell phone payment or a free this or that they can now use that income for to help supplement. And you think about it, for those types of people, their social security check at most might be $1,600, $2,000. That's an extra social security payment, right? That's good money. You know, that's something that people can actually use to live off of. So the people that are downplaying that are the same people that think when people share $100,000 on X are poor. It's like, no, you know, that's a big accomplishment for a lot of people. They've been working extremely hard, and the people that downplay that are likely to find nothing in their pockets at the end of the day.
Yeah, so I am reading all the comments. So real quick, it was the reason I started this portfolio is because I used to write a lot about dividend companies, and I still do. And there were a lot of comments in my articles that dividend investing only works if you have a lot of money. And I said, well, no, that's not really true. Anybody can build a dividend portfolio. And I said, okay, I'm going to start with $100. And every week I'm going to put $100 and I'm going to document it. And it's just over 5 years. These are the numbers. And the goal for the dividend harvesting portfolio, I'm planning on doing it until I retire and just letting it continue to compound. The end goal is to have this generating 15, 20, 25, 30 grand a year. I don't know what it's going to do in the future, but if it's a 27.11 now going into this year, in 2 years, 2.5 years from now, it could be at the point where it is generating $5,200 a year in dividend income, which would effectively double the amount of money I put in on an annual basis to this account. I do not put more than $100 in a week. I do not put less. It is a very strict budget. And the hardest thing has been for me not to put more money into it because I want to stay true to the original premise. And it's going to be interesting to see what happens with it.
Hot Steve, man. I'm telling you.
So who knows? But yeah, it'll be interesting. The portfolio, I said it before. Hold on, I'll tell you where it finished. $33,548.30. And keep in mind, the goals of this portfolio, there's very specific investment rules. Can't go more than 5% in an individual position, can't go more than 20% in a sector. And the first two goals, reoccurring dividend income and risk mitigation. Capital appreciation is a secondary goal. I am not focused on capital appreciation. And this is the second best chart. The blue line is invested capital. The red line is account balance, and the yellow line is dividend income. When you think about everything we've gone through over the past 5 years, this account has never really went down under invested capital. It has spent maybe 4% of its lifespan under invested capital. And even when the Russia-Ukraine war happened and the market tanked, this account was beating the market on risk mitigation. That's always been the number one goal, is risk mitigation. And number 1A is dividend income. This is not supposed to beat the market. I am not trying to beat the market. Otherwise, I would have said Apple, Microsoft, Meta, Alphabet, NVIDIA are all dividend stocks. They're all going in. The only one of those that's in here is Alphabet. I bought one share of it for the account. That's it. Not trying to beat the market on this. Now, what Matt and I are going to do on Sunday/Monday, that we will be trying to beat the market. So that will be a completely different thing.
Yeah, and I want to show something to people. It kind of goes back into what we talked about, like a couple. So I'm just assuming that you take this. You've been investing in it for 5 years, right?
Yeah.
And you're at 33,000. You're going to continue the 433 a month. Let's just say for another 20 years, so 25 years total investing. I'm just going to do 7% interest rate, assuming, right? What I'm assuming is maybe some inflation is in there or something. So instead of 10% or whatever, I'll just do 7, right? And then let's do plus or minus 1.5%, and then that compounds annually. I mean, you could potentially end up with anywhere between 340,000. Keep in mind that's inflation. I'm inflation adjusted, right? Because the market was up 10% over the past. I forget what it is, Steve, but it's up 10% since like the 40s or something like that. So let's just say it's only 7%, right, to account for that inflation. You could end up with anywhere between 277 and $420, and that's investing $100 a week. And so
here's the thing: on 340, let's go at the midpoint. On 340 at 10%, that's 34 grand a year in income off of $100 a week, which is just a side account.
Yeah, I mean, even if
that's a lot of casino money.
Yeah, it's a lot.
Just saying.
Everyone wants to know what Steve's going to do with it.
Probably go Borgata and roll dice.
He's going to put it all on black one day.
You know, that's
I think that's one of the best. That's one of the best series on Seeking Alpha that I see. Is that one?
Thank you. I appreciate that. So, Evan, thank you for being here. QQQI is in my top 10 holdings in this. I think it's that and the Goldman Sachs ETFs are my two favorite call option ETFs. QQQI and SPYI are phenomenal, in my opinion. People don't think about when you retire, you no longer get your paycheck. And you have to take a disbursement from your retirement accounts. Everybody just thinks that they're going to magically have this number just sitting around. They're going to be fine. That's often not the case. And you're going to get Social Security. You're going to have to draw down your retirement account. I have a section where I want income coming in. And this is just going to be one of the areas I get it from.
I love it. Well, Steve, I'm trying to think what else. But I'm just going to tell people in my chat to follow you. I don't, unless you have other things.
I got to finish writing this article that I was trying to get done.
Yeah, I'm probably going to go read a little bit. I'm trying to get better about reading. And
dude, listen to the Gold Coast.
I was going to read crap. I just had it in my hand. I put it over my.
I promise you, you're going to love it.
You know, Steve, can I ask you a serious question?
I'm not lying to you like the 7,000 S&P.
No. I know you're not going to lie to me. Do you think I have gravitas?
Sure, man.
That's a no. I don't have any gravitas. God damn it.
What do you mean? I said sure. I don't even know what gravitas means.
You don't know what gravitas means?
No.
Okay. It's executive presence.
You're using these fancy words I've never heard of.
Gravitas means executive presence. It's different than charisma.
You couldn't just say swagger?
I know I have a lot of charisma. I have a lot of swagger, but do I have actual gravitas, right? So keep in mind, like these, let's just say, I'll use a poor example of this, but like imagine some guy that's slick, ladies' man, whatever, in a bar or like a grocery store that tries to pick up chicks. That's somebody that's got charisma. You look at them, you're like, I think I can get along with that guy. He's got good jokes or whatever. Gravitas is Jensen on stage at CES. Respect. People want to listen because they know that he's going to say something absolutely insane. Like that is gravitas. And I need gravitas, and I don't have gravitas.
I think you're underestimating yourself.
I appreciate that.
I think you're underestimating yourself. And I think you should seriously listen to the Gold Coast. The person who reads it's phenomenal. It's an amazing book, amazing author.
How about I pay? How much do I have to pay for you to read the Gold Coast to me?
How much do you have to pay for me to read it to you?
Yeah, like is that like if you got to ask, you can't afford it? Like is that what is that what I'm hearing?
I don't even have the time to freaking do anything else other than I'm doing. How am I going to
What's
read to you for 30 minutes a night or an hour a night?
what's your favorite? Oh, fajitas, dude! Don't tell me that. I didn't eat enough for my meal. Um, the what's your favorite finance book, Steve?
I mean, it's the obvious ones.
Value Investor.
It's the obvious ones. There's no great book in my opinion.
This is where I'm going to in the streets. Can we do a read along with Steve?
No, we can't.
The question I have for you, Steve,
I don't
is
even know if we would legally be allowed to do a read along.
it is if it's more than 75 years old or whatever.
Well, this is not more than 75 years old.
We got to start, and I actually thought about doing that. So, smart thing for people: things that are off copyright, right? So things that are more than it's like 75 years old, something like that. You could technically recreate those books and sell them on Amazon and or read them or whatever, and put them on YouTube. Yes, like The Richest Man in Babylon, for example. You could recreate that because it's off copyright at this point. So if you sold that or read it on here, you couldn't get in trouble.
Well, I would love to do a read along for the Gold Coast because it's my favorite book, but
maybe that's what I'll do, Steve. Maybe every once in a while I'll do a little read along with Maddie.
I think you could. I think you could. That's why they asked, what would Maddie do?
They try, but
we
well,
could,
I'm just saying,
we could start a book club. I've listened. I think I have like 370 books on my Audible account that I've listened to. And I have not listened to a book in like 5 years.
Really? That's impressive.
Well, my office moved at one point from Long Island to Jersey, and I was commuting from here to Jersey and back every day. And this was before podcasts were a thing. And it was just Rogan. So I would alternate between Rogan and books on tape. I killed so many books. Vince Flynn, Daniel Balducci, Nelson DeMille.
Should I pick up another? I was going to read a book on what is it? It's not 7 Habits of Highly, but it's something similar. It's like 7 Rules of Power or something like that. But I should probably finish this book before I finish another one. So I'll probably finish the Karp book, the Karp biography, before I finish start. I'm in the middle of Keep Your Enemies Closer by Patrick Bet-David, and I'm also in the middle of this one, The Philosopher in the Valley. I can't wait till I see Amit's name in here, because Amit's name is in this book.
You know, I really like biographies, and I thought that Ken Langone's was amazing. You ever read that?
No.
Amazing.
Really?
Yeah.
Another one that I heard. So I don't know if your family are big Rolling Stones fans or not, but my dad was a huge Stones fan, and so somebody told me the other day that Keith Richards had a book. You know Keith Richards, the guitarist.
Yes.
Look how thick this boy is. But apparently, I mean, the Stones went through some shit, right? So I'm excited because they were like, he goes through it all in that book, and so I'm kind of crazy, like excited to hear all.
They're going to go through the whole Hell's Angels security thing,
probably, and how they apparently they got in trouble for moving to Paris to avoid taxes and shit like that. So everything. So I'm excited to do that, but I got to read Karp first, and then see Amit's name in here. I'm gonna freak out when I see Amit's name, and then I don't know what else I'm gonna do, but I'm trying to get better at reading. I need to get off the computer as much and read more. So.
Maddie, you heard it here first.
Thanks for having me on, man. I had a lot of fun. 200 some people.
I mean, I'm just happy you're streaming more. That's all, man. I'm just happy you're streaming more.
It's easy when you got a good counterpart like you.
Well, I gotta call it. I still have to get some work done, and I should look at my emails also, even though I don't want to. And
10 o'clock, Steve. Don't work too long.
listen, it's what we do, right? Burn the candle at both ends, and all we do is work.
I need 8 figs at minimum. I'm not done until 8 figs. You got to get there.
My favorite REIT is I got a tie: Starwood Property Group, Realty Income, and Simon Property Group.
It all depends on what you're going for.
Yeah.
You know, if you're going for income, Starwood, bro, especially if you can put in a tax advantage account. Dude,
Yeah, that and AGNC are so legit for income.
yeah. Charles, thank you so much. Any followers would be appreciated, but
Thank you everybody for being here. Thank you, Chels. Thank you, June. Thanks, Ray. Thanks, Michelle. Really appreciate everything you guys do for us and help out. And thank you everybody for being here. Really means a lot. Maybe Maddie and I will be on tomorrow. I'll definitely be on the FinTech Friday if we have it. We'll see what happens.
we're on the warpath to 20K. You and me, Steve.
And we'll be looking more into Zeta. And,
White boy.
get it going.
Man. As always, are you buying more Sapphire or no? No?
No.
Okay. What if it goes to 15?
Then I could get tempted into. Oh, actually, no. You know what? I can't say no. I'm not anymore because I may buy more on Monday for the $10,000 challenge. That may be something we probably will put on.
I might. How are those CSPs looking? I'll look at
Locking up 27% of the funds to do a little CSP. Just saying. I got some ideas.
Steve's got ideas. All right, my man. You're the man.
All right, everyone. Have a good night. Don't do anything we wouldn't do. Talk to you later.
Later. Take care, Steve.